Hi everyone and welcome to our interest rate update for June 2015. I'm here with Rob Gilmour. Tell us a bit about the decision today, Rob.
Yeah, thanks Aaron. The Reserve Bank decided to leave interest rates on hold this month at 2%.
Not a lot of news there, so what came out of the statement today?
Well, largely the same themes as to what the Reserve Bank has been discussing over the last few months, and that's obviously concerns around the Australian economy, looking at commodity prices, looking at the Australian dollar, and really the next move from here is probably going to be determined by the data and the outlook for the economy. So very much a wait-and-see approach, I believe.
Okay. There has been a lot of other discussion this month, particularly in relation to house price increases. What have you heard around the traps?
Look, absolutely. One of the other board members, Treasury Secretary John Fraser, came out during the week and did refer to the property market in Sydney as a bubble. And the Reserve Bank statement today did specifically mention that the board is, or the bank is going to be working with the regulators in order to review and assess some of the risks they're starting to see in the property market. So I suspect that's going to translate to pressure on the banks.
I'm seeing it. It's true, like investment loan policy has changed. There's been a number of things that have changed in the last sort of 5 to 7 days. Interest rates are higher for investment loans, your borrowing capacity is lower, and it's harder to even get interest-only repayments. So there is a changing landscape that's going on there right now, and has that had any effect on, like, in the market side of things?
Well, look, absolutely. The banks have come under a lot of scrutiny from the markets over the last month, and in actual fact, since the Reserve Bank cut interest rates, there was a very strong perception from market participants that that might be the last cut, and we've seen bank shares sold down 15 to 20% during that period, which is a sizable correction for any particular stock.
Absolutely.
But look, the banks still are very, very strong franchises. They do make super profits.
They are banks.
That's right. And I suspect from here the dividends that they pay will be supportive of their share prices. But absolutely, they've come under a lot more scrutiny because of the environment that they're faced with.
Okay. Well, that's our interest rate update for June 2015. We'll see you again next month.